Happy Friday. Thanks for joining me and the rest of the team here at StablePoint. I have a few thoughts to share with you here this week on everything going on in the markets around artificial intelligence, the Federal Reserve. We're going to touch on those areas and talk a little bit about our upcoming Vision series as well. But first and foremost, we wanted to say thank you to you clients, followers of ours, for helping support StablePoint and our growth here as a firm. We just had the opportunity to get through $1 billion in client assets under management this summer, which is a really fun milestone here for us. I want to take a minute to celebrate, but most importantly, I want to say thank you for the trust, the confidence, the advocacy that you all have in us. It means a lot. It enables us to reinvest in the business and deliver an even better outcome from our end for you as we go forward. So thank you. Back to the markets. Number one this week, all around artificial intelligence, big earnings on Wednesday from NVIDIA. 70% revenue growth projected for fiscal 2028, which ends for them in January of 2028. That's a huge number, and per their guidance, it actually would have been bigger. They're just a little bit limited to their supply constraints, but the demand for AI is very, very real. And a lot of people in America have had a lot of questions around this concept of the circular motion of money within the artificial intelligence space. I wanted to share a diagram on that with you. It's a little crazy. Don't feel like you need to understand it. But yes, a lot of dollars are being essentially recycled within the AI infrastructure within that space where company A makes a big investment into company B then goes back, purchases a lot of services or equipment from company A. So we're keeping a very, very close eye on everything that's going on there. While we're not overly concerned because these are real dollars and they are real revenue receipts, at the end of the day, these businesses are going to need to see users and revenue dollars coming in the door for the compute in a lot of the systems that they are putting into place. So I would focus people's attention on keeping your eyes on the dollars that are going to come down the road from everything that's getting built out. And that's where we're focusing our attention, which will ultimately really drive the values for a lot of these companies. On the AI front too, I'm going to share another quick chart with you around data centers. We have a lot of questions around that. And data centers come up, really big in the compute and the AI and the storage that are driving a lot of share prices higher. And you are seeing on this chart the orange line year over year change in spending as a percentage on data centers, right? That's coming down. That's not coming down because of protesting or moratoriums, but however, you're seeing more of a linear increase in spend, law of large numbers. As those total dollars get bigger, the percentage growth does come down a little bit, but it's very stable, and you're seeing that continue to increase. So data center spend is a big driver for the AI industry. That is a definite sticking point right now for a lot of people, a lot of states, several on a moratorium right now to explore that further. So that's another area with AI as we look at the big earnings from this week from corporate America that we want to understand really well and make sure we know where that's going in the next couple of years, as that will drive a lot of the spend in that space. The other big area that we're looking at right now is one of my favorite places. I got to spend nowhere near enough time there with my family a couple years ago, which is out in Jackson Hole. Over the next couple of days, the Federal Reserve will be there meeting as they do every year with their large summit. And I'll share one final chart with you here today. And this is a chart of the 30-year Treasury bond rate. That's why I feel like this is such an important meeting of the Fed. The rate, if you can see it on your screen, for a 30-year Treasury has gone from around 4.5% up to as high as around 5.25%, just down a little bit recently. But that's a pretty big increase in long-term interest rates. It's a big increase in borrowing rates for the United States government. And it's a little bit of a tricky conundrum because we're seeing inflation actually increase a little bit here with the increases in the price of oil, which makes it difficult to see interest rates decline and have the Fed cut. So we're watching interest rates incredibly carefully. These will dictate a lot of asset values around stocks, around bonds. And I think the Federal Reserve is in an interesting place right now to figure out how do we solve that, especially along with the Treasury and what they've called, economic D-Day in the dealings with Iran and everything that's going on over there. So these are the things that to us stand out this week. These are the things that we're spending a lot of our time and our attention on, looking, well down the road and around the corner as to how they're going to influence things for you. I'll leave you today with an update on one of the funnest things that we do every year. We've done it for almost 20 years now, is our Vision event. We are transitioning that this year to a series of 4 smaller Vision events in hopes to spend a little bit more time with everybody that comes and give a little more calendar flexibility. If you're not local to Boston, we'd love to have you come join us. So we'll share more information with that as well in the coming days through email. So we hope we can see you this fall at one of our events. Hope you have a wonderful weekend. Have a great Labor Day coming up next week. Enjoy the end of summer. We're here. Any questions you have, reach out anytime. But as always, thank you for your trust, your confidence, and your advocacy in all that we do.